So we'll continue our discussion on economics. We have started off with the module taxation, and in the first lecture we have talked about taxation, the important terms, and in the second session I think we have talked about direct taxes, and we have completed around 12-15 different types of direct taxes. All the possible direct taxes are covered in that particular lecture. And in the third session we have started off with the indirect taxes, and there I have explained the ideal concept of indirect tax, which is VAT, which is at the production level. Okay, and then we talked about the sen VAT, okay, mode VAT, sen VAT, and all those things we have discussed. So we are actually continuing with the indirect taxation system here. So here I'll be talking about GST, and in detail we'll cover that particular area, the concept of GST, the components of GST, and how is it going to be advantageous. When I'm talking about the advantages, most of the advantages that we have actually discussed in case of VAT is the advantage in case of GST also. So at that time itself I have told you there is no point in separately discussing about advantages of GST once we cover advantages of VAT. So I will not be talking about advantages here. That's actually not required in this session if you have watched that particular session. So we'll be talking about limitations and other problems, and everything will be covered. Anti-profiteering authority, everything will be covered here. Okay, so we'll start with indirect taxation system. Okay, so indirect tax is actually imposed on production and distribution of goods and services. And at the production level, how is it imposed and who is it imposed, we have discussed. At the distribution level, it is in the domain of the state, that we have already discussed, right? So we'll just write it down. Production of goods, what the tax? Production of goods, we have excise, right? And this was modified to mode VAT based on the ideal concept of VAT in 1986, and in 2000 we have discussed that it was replaced with sen VAT. Okay, there were some modifications which have done in mode VAT to convert to sen VAT. Then distribution of goods, we have sales tax. Now if you are importing from abroad, it is going to be custom duty in case of distribution. Okay, so third one, production and distribution of services, because you don't have a different stages in service. You are not producing a service and you are not keeping it for a long time to deliver it. Okay, so production and distribution both are actually happening at the same time, so we are writing it together. Production and distribution of service. Okay, so there will be only one stage, and the services cannot be stored, right? So here you have service tax. So these are the three major indirect taxes. Okay, now out of this we have discussed that in 1986 this excise was in 1986 changed to mode VAT. In detail we have done this discussion in the previous video, and in 2000 it became sen VAT. Okay, now what about sales tax? The sales tax in 2005 we have changed it to state level VAT. Okay, see, although it is named as VAT, I've told you this is not exactly VAT. It's not value added tax, but it's a modified form of VAT, and that's exactly the case in mode VAT and sen VAT also, not only here in state level VAT. Okay, so VAT is an ideal concept which is difficult to implement in developing countries because of availability of records, infrastructure, software, and all those things are actually creating problem in developing countries. So it is difficult to implement, and which is an ideal concept of tax. Okay, so here we have gone for a modified version of VAT at the state level. In case of distribution, sales tax was changed to state level VAT. You don't have to have any confusion that this is the actual VAT that we are talking about. No, this is a modified version. Okay, now what happened? Now we have three different taxes. Now we have this one, sen VAT, and we have state VAT, and we have service tax. These three are now actually merged to GST. Okay, so almost, and plus some other tax also, some other tax like entertainment taxes and everything, some other taxes like example entertainment taxes, all merged to GST. So almost all indirect taxes are merged into GST. Now what are the components of GST? If you see GST, okay, so GST, first component is central GST, okay, which is CGST, CGST. What is that? That is nothing but this SENVAT only. Okay, CGST. What about the second component? State GST or SGST. What is that? That is nothing but this state VAT only. What is the third component? Third component is actually integrated GST. Integrated GST. Okay, IGST. What is that? It is actually imposed on interstate trade. Okay, now before also there was such kind of taxes, that was a central sales tax, okay, which was again imposed on interstate trade. I'll be discussing about that in detail after some time, interstate trade and in the central sales tax and the disadvantages of central sales tax we'll discuss. And this is actually similar to that CGST, not CGST, central sales tax. Okay, CST. What about this third one, the service tax? This service tax is actually going to both this and this. Okay, so that will be merged into central and state GST. So there are three components: central GST, state GST, integrated GST. Integrated GST is actually imposed on interstate trade. Now, what is state VAT? We have already discussed about mod VAT and sen VAT. So state VAT I haven't discussed in the previous session, so let me quickly write it down. It's actually the traders who pay taxes on their outputs, okay, but their input cost will be offset or reimbursed exactly in the similar way that of mod VAT and sen VAT, but here it is traders. Why I'm talking about traders? Because it is at the distribution stage, so I'm talking about traders. So I'll write it down. Traders have to pay taxes on the basis of their value of output, I mean sales. Okay, here the value of output means sales, but taxes paid on inputs could be offset or reimbursed. Okay, so traders have to pay taxes on the basis of their value of output, and the taxes which is paid at the previous stage, that will be offset. Offset means you just need to pay that only for that value addition, or reimburse means you paid completely and you give the details of what you paid in as input, you will get reimbursement. Okay, in this what is the concern of the state? Actually the concern of the state is, if you are going for this, you have to go for a uniform manner, so every state have to follow the same thing. Okay, now in 1999 there was a conference of CM by PM, conference of CMs, of chief ministers of all the states by PM, and in that the government, central government, appealed that every state have to implement this. Okay, and they have promised that they will provide all the technical support, and they will also be compensated financially, the tax revenue, in case if there will be a loss, that will be compensated by the center. And in 2000 there was an empowered committee of the finance ministers. So the objective of this empowered committee is basically the consensus for implementation. You need consensus of all the states. Okay, so consensus for the implementation of this, and there was a white paper published in 2005, white paper on VAT. I'm talking about VAT. We'll come to GST. Okay, it's an evolution. So in Jan 2005. Now after this, most of the states adopted, except few states like UP, Uttar Pradesh, Uttarakhand, Tamil Nadu, and it is mostly because of political reason, because during this time actually elections were going on there, so you don't unnecessarily want making the traders will feel that you are making problems for them, because it is very difficult to convince them that the new taxation that they are going to implement. So during election time that they have not done, but by 2008 all states have adopted. So this is the story of state VAT. So I hope this is clear. Now what are the limitations of state VAT? Let's quickly discuss about the limitations of state VAT. The first limitation is actually, if you pay tax in one state, it cannot be offset, or if it cannot be reimbursed. Okay, so the taxes paid in one state cannot be reimbursed or offset in other states. So I have already told you in case of state VAT, it's a modified form of VAT. So the inputs will be reimbursed, but here if you are using the inputs from some other state, it will not be reimbursed in the state. Okay, so that is actually a big problem, and that will not be the case with GST. So in GST this problem will be solved. In GST it will be reimbursed, so that promote interstate trade. So here in this case, if you are going for interstate trade, there will be multiple taxes you need to pay. Okay, so that is actually one of the most important problem. Now let's look into the second problem. I have already talked about central sales tax, right? CST, central sales tax, which is not abolished. Central sales tax has not been abolished. Now, what is central sales tax? It's actually the tax which is imposed by the center in case of interstate trade. When I've talked about the components of GST, I've told you the third component, integrated GST, that is also imposed on interstate trade. Okay, so here not abolished. Now, what is the now let me write it down. What is CST? It is imposed on interstate trade. Okay, so now what is this tax? If there is a transaction between Tamil Nadu and Kerala, okay, so if the manufacturing is happening at Tamil Nadu, that means the originating state is Tamil Nadu, but the distribution and sale and everything is actually happening at Kerala. So the producer is Tamil Nadu, but in case of sales tax, Tamil Nadu is not getting anything because production tax is actually gone as excise or VAT to the center. Okay, tax on production is actually for the center. So Tamil Nadu government is not getting anything, but the producer is this Tamil Nadu, and sales tax is actually for Kerala because distribution over there. So to compensate the state, central government will impose some tax, that is what CST. And who will collect the tax? The central government will collect the tax and will distribute to the originating state. Originating state means Tamil Nadu government. Okay, so CST, if it is 2% means you will collect 2% and you will give it to the originating state. So I hope that is clear. So what will actually happen is this will actually increase the prices in the market. Okay, so that actually demotivate the interstate trade. So what will happen is, if Tamil Nadu is a better producer, if an efficient producer, let's say Tamil Nadu is producing one item at 10 rupee, let's suppose this pen at 10 rupee, and Kerala is producing at 11 rupee. Okay, now suppose the government is imposing a tax of, let's say 1 rupee here in Tamil Nadu, or 2 rupee tax which is imposed, so this will become 12. Okay, and that will cost more in Kerala if you are selling. Basically what I want to tell you is, the Kerala, there is an inefficient firm. Tamil Nadu, there is a better firm, efficient firm. They are producing the same pen at a lesser cost, but they are at a disadvantage because of this particular tax, because their product will become dearer. Okay, and when compared to Kerala, why? Because of this particular tax. Okay, so it's a kind of custom duty between interstate, right? When it's almost like when you're importing, you have to pay some tax. It's almost like a custom duty. So that is also one of the concern, that it was not abolished. And when we talk about GST also, I'll tell the same point. Now let's move on to GST. So we'll talk about GST now. So what is GST? GST is actually based on the concept of VAT. It is an indirect tax which is based on the concept of VAT. Okay, so it is an indirect tax. Indirect tax, basically goods and service tax, goods and service tax, services tax. It's an indirect tax which is imposed on, which is based on the concept of VAT. Okay, so I have already told you many times from the first session onwards, VAT is an ideal concept, but GST is a practical version of VAT. Whatever possible way we can implement, we are implementing it. If you remember, I have drawn the table in case of actual VAT case, and I have explained the table in the previous video, and I've also talked about what is actually happening in the case of modified VAT, that is mode VAT. I have taken the same table and I have explained it, and what is the difference between mode VAT, which is practically possible, and VAT, which is an ideal concept. Okay, so everything is discussed. So here also it is based on the concept of VAT. The practical implementation of VAT is actually what you can see in case of GST. So let me write it down. It seeks to replace all major indirect taxes of center and states. Like, now we'll talk about all the indirect taxes we have discussed. I have told you 3 major indirect taxes were merged into GST plus some other taxes, right? Three major taxes were excise, sales tax and service tax, and plus some other minor taxes like entertainment taxes, and everything is actually merged into GST. States like excise or SENVAT, okay, comma, sales tax. I have already told you this is also known as State VAT. Okay, so wholesale tax, retail tax, okay, turnover tax, everything. So wholesale tax, retail tax, turnover tax, service tax, entertainment tax, entry tax, additional excise duty, additional excise duties, custom duties, etc. I'm writing few, whatever possible I'm writing. So these are the taxes which were coming as part of GST. Okay, so all these will be replaced and under GST. Now what is the concept of GST? So you have to pay taxes on, under GST, you have to pay taxes on the value addition. Okay, so value addition means value of output you need to pay, because it is very difficult to calculate value addition in developing countries, which I have told you. So you will pay for the entire value of output, but the taxes which is paid at the previous stage will be reimbursed, and that is the practical version of VAT. Original VAT is only for value addition, value added tax, but that is difficult to implement. So you will pay for this entire pen, but the raw material cost, the input cost, the taxes paid over there will be reimbursed. Okay, so if you got the raw material for 8 rupee and you made this pen for 10 rupee and you're selling at 10 rupee, effectively you need to pay for 2, but that is not possible to calculate. So you will pay for 10 and you will give the bill and the details of the inputs, you will get the reimbursement of the previous tax paid. So effectively you are paying for 2 rupee. Okay, so let me write it down. Under GST, firms have to pay tax on the basis of their value of output, but taxes paid on inputs can be offset or reimbursed in the form of input tax credit. Okay, input tax credit, ITC. So I hope you understood this. Now the advantages of GST. Advantages of GST we have already discussed in detail. So advantages of GST is the same as that of VAT. So same as VAT. We have already covered, I've discussed around 7-8 concepts there, and I've explained in detail everything, why it is a particular advantage, everything we have discussed. Okay. Now let's quickly look into that features of GST Act 2016. Features of GST Act 2016. See, one of the disadvantage of state VAT is the taxes which is paid in one state cannot be reimbursed in the other state. But that problem is going to be solved here. So here the first point that you can see here is taxes paid in one state will be reimbursed in the other state. Okay, paid in one state can be reimbursed in other state. Okay, so what is the advantage? It is actually helping, it is actually solving that issue with interstate trade, and there won't be multiple taxations in case of interstate trade which promote interstate trade, but the concern of the states is actually they lose their revenue. Okay, I'll tell you how this problem is going to be solved. Okay, second one. This is very important because I have told you two types of taxes, CGST, two components of GST, CGST and SGST, Center GST and State GST. Okay, so here taxes paid under CGST can be reimbursed or offset only under CGST, that is not under SGST, and vice versa. Okay. Okay, so I hope you understood this. The taxes paid under CGST can be reimbursed only under CGST. That means at the production level or the manufacturing level, you pay taxes that can be reimbursed. But once it reaches to distribution level, you cannot claim the taxes paid at the production level. For example, if you see this, let's suppose this is manufacturing stage and this is the trader at the distribution level. Okay, so here we have CGST and here we have SGST. So I want to make this point clear. So let's say A, B, C. Now you are getting inputs from A first. Okay, so B can get an offset or B can claim reimbursement. Then C can also get offset. Okay, or C can claim the reimbursement. Any of this is possible because see, this is at the CGST level. So taxes paid at the CGST, you can get offset. Now let's suppose here there will be a wholesaler and then it will go to retailer. Okay, but from here to here there won't be any offset. No offset. Okay, why? Because why there is no offset? Logically, if you think, this is SGST, this is a state GST and this is center GST. Where you are paying the center GST, you are paying it to the center. So state didn't get anything. So here you are paying it to the state. For the first time you are paying it to the state, so there won't be any reimbursement. But here, when it comes to retailer here, there will be offset. So I hope this point is clear for you. So at the distribution level, in the beginning there won't be any offset because taxes paid at the CGST level won't be offset or reimbursed. Okay, so I hope this point is very clear for you. The taxes paid under CGSTs can be reimbursed or offset only under CGST and not under SGST. Same is in the case of this also, SGST also. Second point, a GST council will be established within 60 days of enactment of this act, and this is basically for dispute resolution. Okay, so the head of this will be Union Finance Minister. Head Union Finance Minister. Okay, so the members, Union Minister of States for Finance. Union Minister of States for Finance. Okay, so these are state rank ministers within central government, so different rank. Okay, now after this, finance ministers of states. So union finance minister of states means there's a state rank minister only. Okay, so within the central government, the state rank minister. So then finance ministers of all states. So head will be union finance minister. Okay, so now what is the share of what? 1/3 for center. Okay, and 2/3 for states, and for major decisions you need to get 75%. Okay, vote. Now here most of the share is actually with the state. Around 66% is actually with the state. 67% is with the state. Okay, so that state concern will be solved with that provision. Major voting share is actually with the state. Let's look into the third point. So next is actually liquor for human consumption will be exempted from GST. Liquor for human consumption will be exempted from GST. Then the petroleum products will be included. Petroleum products will be included in GST in a phased manner. In a phased manner, this liquor exempted. Liquor for human consumption will be exempted. Okay. Then next point is exports will be zero rated. I'll tell you what is zero rating. Let me write it down. Exports will be zero rated. Zero rating means under this the product is exempted from tax, and that means if you are paid tax, that will be reimbursed also. Okay, so the product will be exempted from tax, so that is what you mean by zero rating. Actually, effectively there is no indirect tax on exports, so the exports will become more competitive in the market. Okay, so that's why this zero rating concept is there. Next point, IGST would be levied on interstate supply of goods and services. Okay, so IGST, I've already told you, this is instead of CST, central sales tax. Okay, it is actually imposed on interstate supply of goods and services. Center will collect tax and will distribute to the originating state. Okay, then GST network, GSTN. So what is this? It is an entity which provide IT infrastructure for the implementation of GST. Okay, it provide IT infrastructure for implementation of GST. Then it will also maintain all records related to indirect taxes. Okay, maintain all records related to indirect taxes. It will also enable the firms to pay GST electronically and can get all the reimbursement, offset, etc. directly in an electronic way. Okay, so it will enable firms to electronically file tax, and the tax returns and input tax credits, etc. everything will be electronically done. So it is, but one thing is, it is established as a private sector company. Okay, private sector company. Now quickly look into the issues or concerns of states. Concerns of state. First one, loss of tax revenue, which was addressed in GST. Up to 5 years center will compensate. Okay, so up to 5 years center will compensate. Then loss of autonomy. This was one of the other concern of state related to GST, but I've already discussed about the voting rights. 2/3 is actually given to the state, so that is also not a problem. Okay, then exclusion of certain items were also concerned. Okay, exclusion of alcohol, tobacco, etc. That was a concern, but later this was accepted and tobacco was actually included later. So exclusion of items, I'm not writing completely. And then loss of producing states. This point I have discussed already. So under this IGST, integrated GST will be collected, and 1% of the 1% additional tax will be collected and will be distributed to the producing state. Okay, but this was later abolished. I told you there is a disadvantage in this, and in that because of Congress protest and the opposition protest, it was actually abolished. Okay, so Congress opposed it strongly, so this was abolished later. Now some of the demands of opposition at that time was abolition of 1% tax, okay, on interstate trade. That we have already seen, that was abolished later here because of the Congress opposition. Then cap on GST rate at 18%. Okay, independent dispute resolution mechanism, we have already discussed that point. Alcohol, petroleum product to be included in GST. Why? Because if it is excluded, there won't be any uniformity, because you are claiming uniformity in case of GST, and if you are excluding this, there is no uniformity. Then GST bill will be a financial bill, okay, not a money bill. The reason is if it is money bill, there is no role in case of in Rajya Sabha. Okay, so but it is not accepted. It came as a financial bill only. It was not accepted. Now, there was a provision in a GST bill, that is anti-profiteering authority. Quickly discuss about that and we'll wind it up. Okay, so anti-profiteering authority. So this we have already discussed before. See, when we discussed in the previous session, I've told you the tax rate will be higher in GST, but the tax burden will be lower in GST. Why? Because there is no cascading of tax. If you're talking about 10% tax in case of excise, sales tax, etc. before, you may be paying it at 4 different levels. Okay, so there is cascading of state, and effectively you're paying around 40%. Now, in case of GST, there may be 15% state GST and 15% central GST, but effectively it is 30%. Okay, so tax rate, if you see, this is 15%, here it is 10%, but how much you are paying, that burden, if you see, it is actually very less in case of GST. Okay, now what is the role of anti-profiteering authority? It is actually the shopkeep. If let's suppose this pen costs 10 rupee, the shopkeep before it was 10% tax, right? So this can be sold at 11 rupee. Now this, let's suppose if it is 15%, the shopkeeper can tell that Before it was 10, now it is 15, so you have to pay 11.5 percentage. But you need to understand that this 10% itself includes the taxes which is paid earlier, and it has to be reimbursed, right? So that advantage to be passed on to the customer, and that is the objective of anti-profiteering authority.